Hello and hello to you all. Today it's the 17th of January 2024. It's a Wednesday night in Turkey, Izmir, and I'm doing this weekly English video on a fortunately on a very let's say shaky day. What's happening in the world? Why the gold stocks and everything is falling down? Bond prices in the USA, interest rates are going up. So it's a good opportunity. This is my cat, Benjamin. Yes, like your $1, Benjamin Franklin. Benjamin does not normally stay easy, but wanted to come for the moment. So I just wanted to show him to you all. Okay, now what I will do, the reason I'm doing this video, I will show you some sections from investing site website, just to explain what's happening in the world, because the latest numbers which I was telling to come in Turkish mean time 16:30 US retail sales news. US retail sales of December, these are previous month sales, came in much higher than expected, which means Americans are spending a lot more. So there is no news of inflation ceasing at all. So that means Fed in this coming meetings will not reduce the interest rate. So that means it's bad for the gold and all other investments, because interest rate will be better than investing in something you don't know how much will it pay in the future, because interest rates is definite. You know how much you're going to get if you buy a bond today. So you know how much, 4% something, depending on the buying date, and 2-year, 10-year, 30-year bonds. You know the price that it's going to be over 4% per annum per year. So as this rate increases, people decide not to invest in things, maybe just go for the secure, known thing. But is secure really secure? Not as long as inflation exceeds the 4%. Then you are a loser. Not that you only lose the 4% interest. Your total money, which you invested, let's say $100,000, will become $104,000 at the end of the year. However, when you deduct the 4% from $104,000, you actually will lose money, even if it's at 4%. So basically, money is now heading to secure investments, which is guaranteed payment of American bonds. And due to this, is this good news for the US citizens? No, it's not normally. Reason being, you will pay that interest of 4%, 5%. Americans will pay. Okay, it's also very bad news for countries like Turkey, Venezuela, Argentina, because the US rates going up means that they have big competition. Now they, instead of 7, they must give 8%, 9%. So it's all around the world. It's bad news. It's not a good news. It may sound like, oh, we will cut the rates, but that's the result, end result. So if Fed continues, can Fed continue with high interest rates? I doubt it, because this is not just causing big problem for other countries or this just stock exchanges. U.S. Debt clock is now running faster, because now they have to pay 4%, even more, for the old treasuries. Banks are going to be in trouble. Smaller banks are going to be in much more trouble. So this is just a 1 or 2 day action. But assuming if this continues another 2-3 months, it's definite that recession will hit. Recession will be soft landing or hard landing, which they don't call soft landing a recession. But if they keep increasing the rates, or if they don't reduce the rates for much longer, it's definite that recession will hit very hard, like the previous times. No time in history Fed reduced the rates in the past before there was a big recession felt in the economy. So they're always late. So you must be ready for very late application. So is it bad for investors? Not really, depending on how you use the news. Because if you just have a lot of things, you are looking every day, will it go up? Will it go up? Will I make money with my stocks, with my gold, everything? That's a wrong way to invest. An investor always buys when prices are lower. If he or she is, let's say, confident with what he is buying, she is buying. Let's say, if I'm confident buying in gold, I don't care what the price is tomorrow, next week, a month later. If it's cheaper, the better. Today we saw rates coming gold down to, let me show you the gold section for this moment. Okay, I think you will see it right now. Okay, now this is from Gold Price website. As you will see, it started the day with 2021. It went up to 2028. It came down to 2008, almost $8 above 2000. So will it be terrible if it goes down to 1900s? I love it. I love it. Some people will hate it. I love it because I keep buying. I bought here, I bought here, I bought here. I will keep buying. That's like how professionals do, okay? Professional investors do, not professional traders do. Traders just don't care about the direction. If it's falling and if they're betting again for the same direction, they make money. It doesn't matter if gold goes up or down. But an investor should buy cheap and sell high. Okay, that's basic for a little longer term investing. And must keep buying when prices are going up, not just buy at one point and wait years to sell, wait again for it to go up. Keeps averaging down. It's called dollar cost averaging. So same now for the silver. It started 22.70, dollar an ounce. Because dollar is gaining value due to interest going to remain high for longer, all the things priced in US dollar, oil, gas, food, everything is now priced in US dollar will lose value. Only one thing will gain value is the US dollar indices. Now I will show you that one as well. Now I will go to another website. I'll take you to another website. Okay. Just want to make sure that it's showing, okay, on the screen. Now you can see investing website. Okay, here what we look at, on this corner, you see indices, commodities, bonds, and stocks. We can see that US 30, US 500, Dow Jones are all negative, in the negative territory. S&P 500, half a point. NASDAQ, almost close to 1%. So stocks don't like that interests are going to stay higher. And only one thing you see going up is this dollar index, dollar's value against all the lousy other currencies. So you can see from this morning, it came up from 102 to 103.35. It went a little higher, just came back. So that's why you can see the gold went up from 2008 to 2011. Because everything is priced in US dollars. And this is not sustainable, let me tell you. So don't worry at all. Just if you can buy, if you have means to buy, just I would just buy, that's what I do. That's my investment style. Now I'm skipping to commodities. As you can see, I'm correct. Crude oil down 0.5%. Brent oil down almost 1%. Natural gas is down 2%. Gold is down close to 1%. Silver is down 1.5%. Copper is down 1%. Soybeans are down. As you see, this is not sustainable. So don't you worry about it. Just keep buying if you have money. That's my strategy. I don't like to tell people what to do. But I'm telling my own, just buy if prices are coming down altogether. If all the animals in the jungle are running out, be sure that there is a fire going on. and fire doesn't last all that long. It burns out in time. So bonds, as you see, bond interest rates are all up in the US. 5-year bonds are about 2% up. This is not good news for USA. US and the consumers will pay for this interest rate, okay? So you will pay for it from your taxes and everything. Of course, the world members will also, because as long as they accept the US dollar as a reserve currency, everybody's going to meet this loss, okay? Because this is a loss. This is not a gain. For a person who even bought the bonds previously, it's a loss for him also, because he bought them at 4%, 3.8. Now his bond allocation is losing money as well. So we can see stocks here. There are few samples. As you see, Apple is down 1%. Google, Alphabet is down 1.14. Tesla is down almost 3%. Amazon is down 1%. Netflix is down. Meta Platforms is down. Bank of America is down. So I guess this gives everyone a good view of what I'm meaning. It's a no-win situation for everyone, so you just don't have to worry, okay? You just, as I said, as much as I can buy, when I finish this video, I will keep buying. Last night I kept buying. It can go down to 1900s. I love it. I wish it does, So people don't invest like me. They are always thinking opposite. It didn't go up, so it was a terrible day. The stock exchange in US didn't have a good day. Depends on what's a good day. If you are collecting, a losing day is a good day. I buy mutual funds, and when I buy mutual funds, I make my orders in the morning, okay? And knowing this is going to happen, I sold some of my, not physical gold, but some of my, mutual fund gold yesterday, okay? Because this is depending. How did I know? Retail numbers are coming. How do I know retail number was going to go up? Because it was Christmas, it was December. Besides, everything in retails will go up. It will continue to go up. Why? Because prices are going up. So if you bought same amount of cheese last year, if you're buying same amount of cheese this year, didn't increase a bit, it didn't affect by shrinkflation. Shrinkflation means you are buying let's say a bottle of detergent. It writes 900 milliliters. Then they reduce the same size bottle. They put 830 milliliters. That they are not changing the price. They are shrinking the item inside it. So you don't notice. Not everybody reads how many milliliters is this thing. So that's called shrinkflation. They are shrinking the size of the packages. Okay. So there will be a lot of shrinkflation. So when you buy packaged good, you should take a look at the amount, the pound, liter, gram inside it. So with shrinkflation occurring, now you are paying, if you are buying the same item, which used to be a gallon and now it's still a gallon, you start paying a lot. The US is in big trouble. The reason being is this, friends. If the US dollar keeps losing value, inflation starts getting high because US imports majority of its goods. Yesterday, we heard about New York manufacturing was very bad, expected a very low, very bad number. For the market, it's opposite for collectors items. So the manufacturing in New York is only about 8% of total output of New York State. And of the United States, total manufacturing is only 10% of the output. So it's minimal. The reductions, the losses, the big losses in US are from retail, from let's say finance, from insurance. Okay, there is almost close to no production because they exported all their production to China and now they are exporting to India. That's why they have big problems finding spare parts. All the Europe also, they got used of the low wages in China. So now the lagging time due to the Red Sea, and now they have to circle around Africa, is causing big problems and delays in the supply chain. So prices are going to go up both ways. First, due to supply chain, the transport cost doubled. So if you're importing something, transport cost is very important. And U.S. inflation, if you find a chart, I'm not going to show you one here. This is transportation cost. This is U.S. inflation, okay? They are always head to head. So you don't even have to look at another chart. Employment, house prices, nothing. Just transportation to the USA plus inflation of the USA. So, and when US dollar value goes down from 103 to 100, let's say 95, this will automatically affect all the commodity prices will start going up, which they don't want, at least until elections, till November. But now to end that, the big money banks and banksters, they are applying this pressure so that the US dollar is valuable again. The Fed is applying. Where are they applying this? From small teeny weeny retail price increases are turned from a mosquito into a big elephant, okay? That's why Davos is for, in Switzerland. That's where people are saying, oh, we'll probably stay a lot longer with the higher interest rate. Higher interest rates are, as a country, man, it's bad for you because you'll pay very high taxes. But if you're thinking of in terms of gold and other investments, it's perfect thing. And I wish it stays like this until just the opposite of what the market teaches you. I hope it stays the same, even goes up, possibly it won't, stays this way until June, July. Because in the previous times when there was this kind of correction of US interest rates coming up, every time they were lowered by Fed, it was accompanied by the recession and a big drop in stocks. Not good news for stocks when rates fall suddenly. Why? It's good, it's reducing costs. Well, it only falls suddenly because when they hit the fan, okay, when there is recession hit. So it's a big scare. When it happens, people are saying, now we are in trouble, let's sell. So it's not coming. So they like it to be slightly up, but they don't like it to be, strongly down. So this is a big problem. Same for gold. If you're investing in gold and silver, recession is your best friend. And because it's fighting with US dollar interest rate. And when all the stocks and everything else is collapsing, and there is no guarantee, no 4%, maybe 2-3% for the bonds, then people say, I don't care for a 2% bond, US government bonds. I'll just go try my luck somewhere else. And gold will protect me. In the meantime, the stock exchanges are falling. So that's why gold is called an insurance, not a total investment. You cannot make huge amounts of money if you're just buying gold. Gold is a protection. It's advised that you should keep minimum 10%. Depending on your age, you can go up to 30-40% of your wealth. Of course, you should include your house as well in your wealth, not just the stocks you are keeping in the stock exchange or gold and silver. You must include all your belongings, including your household. So then 10% is a good amount of money. If you compare all your wealth, 10% is quite a lot of, let's say, amount that you have invested in. So I hope this was helpful. Don't you worry, everything is cool. If prices go down, that's fine. Tomorrow even this figure may change, depending on which news. Tomorrow job numbers will come from the US. So if the opposite comes, like instead of a good number, if there are a lot of people, lost their jobs and are getting paid by government, that's good news for the markets. But markets are like this. They are just looking for a news just to scare people, get their goods from them, make them happy, make them cry, make them happy, make them cry. But the person who just looks at quantity, doesn't care about how much dollars, how many Turkish lira, how many Indian rupees he made. If he just says, I have a pound of gold, I have 2 pounds of gold, that's quite a lot of gold, then that's the winner, definite winner. You can never lose in the long run. When I mean long run, I don't mean 50 years. Just to give you an example of the past 50 years, in 1970s, now we are in 2024, gold was only 35 US dollars an ounce. Right now, it's 2,000, okay? So it's about more than 55 times it went up. So the dollar will always go down with its own inflation, whether it's 2, 3, 4, 5, 6%, and gold will protect itself, not momentarily. Don't expect that. Don't expect like if there's an inflation this month, gold will either buy it in front or compensate later on. So don't expect a daily, it's not a inflation adjusted government bond. Okay, it's not an I bond. It's not an instrument. It's a real thing. It's a physical thing. Okay. It's the Taurus. Okay. Yeah. So the real thing. Okay, it's the real thing. It's not paper. It's not bubble wrap. It's not plastic. It's the real thing. Okay, hard asset, metallica. Okay, it's the metallica. So don't worry at all. Who has the gold makes the rules. Okay, so I make the rules. Now I'm ending this video. I hope you enjoyed it. See you later. As I said, don't worry, keep investing. Don't worry. Invest in not volatile things, in real things. At least if it's a paper, it should be attached to another physical thing, like a house title. That's not paper. That's a title to the house that you own it. Okay. So I hope you enjoy the video and see you all later.